Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock market's closing action, a wrap up of the day's trade, where were the gains and losses seen, what kind of a market move did you see today, and what can the markets really move in direction as we move into tomorrow's trading session, too? What will be the important factors to track? All of that I will be sharing with you over the next 4 to 5 minutes. So do stay tuned on to with me. First up, let's do a wrap up of today's trading session. Well, markets ended lower for the second consecutive day today. It was a day where the market slipped 500 points in terms of the Sensex, giving up 54,000 kind of levels in today's trading session. And this was on the back of losses being seen in financials, in IT stocks. The Nifty also fell below the 16,100 mark. Some of the specific stocks that were down in trade today was Infosys, Eicher Motors, Hindalco, all dragging the street today. Of course, global markets turned negative, dragging the Indian markets lower today. Of course, investors now are awaiting inflation data of US, of India, monetary tightening by central banks. All of that will be important to track. And the rupee is at a fresh record low yet again at 79.65 to the dollar. So it's a new record low for the rupee too, even though we do know that the RBI has said that it is putting in place a mechanism for international trade settlements in rupees, which banks will need a prior approval to use. The RBI's move comes as the Indian rupee has touched an all-time low amidst the continuing FPI outflow from the domestic markets as well, and which have been broadly, backing the greenback or the US dollar, and that has been extremely critical to watch out for as to when and how will the RBI really step in to prevent the rupee slide further from these current levels as well. Now, in today's trading session, if you talk about the benchmarks, the Sensex dropped 508 points or 0.9% in trade, almost 1% of a loss was seen for the benchmarks. 53,886 was the closing level for the Sensex. The Nifty also lost 157 points in today's trading session to end the day at 16,058. Both the indices had started the day on a weak note, traded low throughout the day. The Sensex, however, hit an intraday low of 53,824. The Nifty also touched a low of 16,031. Although off that low point of the day, the market still ended on a lower side. On the Sensex, you had stocks like Infosys, Nestle, Power Grid, HCL Technologies, HUL, M&M, Kotak Mahindra Bank, Asian Paints. These were the top losers. On the other hand, you had NTPC, Bharti Airtel, Bajaj Finance as the only gainers today. Among the sectors, it was on the Nifty. The Nifty metal fell 1.2%. The IT index slipped over 1%. Media index also slid as well. The Nifty FMCG index was down over 1% too. Now, in the broader market space, the midcap index ended at 22,681, dropping 117 points. The small cap index settled at 25,781. That was down about 0.5% as well. On the volatility index, so the India VIX, that rose by almost 1% to close the day at 18.55. Of course, what are the experts really making of the kind of move that we've seen? Vinod Nair, who is the head of research at Geojit Financial Services, believes that rate hike fears are back in focus in the global markets ahead of the CPI numbers. Inflationary pressures, along with the US jobs data, will definitely keep the Fed on the path of aggressive rate hikes. On the domestic inflation front, retail inflation for the month of June is expected to be out today at around 5:30 p.m. is expected to be somewhere around over 7%, maintaining the last month's levels as well. Demand concerns amid the rebound of virus cases in China compelled crude to trade lower. All of those factors are very, very important to track in as we move forward from here too. Apart from this, we have seen on the currency level, not just the rupee, which is you ended about which ended at 79.60 at closing record lows as well, but it's also about the currency globally. We've seen that the euro is now at parity with the dollar, which means $1 is equal to €1. This has happened after 20 long years. So there is somehow fear of panic, of recession, of fears on what kind of an impact can all of this really cause to the economy in the short term, in the medium term, in the long term, and thereby all the markets are also on a very very jittery footing. As we move forward from here, what will be critical to watch out for? Earnings have started, so stock specific action on the back of earnings will be very important to track. The US markets, the global markets, how they move, the macro data, how it comes about, how do the markets react to that, all of that will be very, very important to track. Most of the experts have been saying to maintain a very strict stock specific approach to markets. As of now, the markets on the benchmark basis may still be very, very volatile and range bound. So that's the kind of word that we are getting from all the experts right there. Well, as far as today's day was concerned, it was a whole lot of combination of mixed action seen on all of these various fronts. I'll keep you posted with everything that moves the day's trade going forward from here. And for that, you need to subscribe to our Business Today YouTube channel. Thanks a lot for tuning in. For now.